All right. Good morning, everybody. Welcome to the Building Trust Digitally panel. I'm Abdirahman, an early stage FinTech investor at F-Prime Capital. We're a global venture capital firm backed by Fidelity. We're based here in Boston area and have been fortunate to partake in the great FinTech ecosystem here with investments in local startups like Flywire, Toast, and many more. As you know, the COVID pandemic has resulted in the rapid digitization of traditionally offline processes for many organizations. For this session, we're excited to discuss how the financial services sector, especially banks, have navigated this transition and what it takes to build a trusted digital brand. We've assembled a great group of experts to share their observations and insights on the landscape we find ourselves in. We'll kick off with a very brief introduction of our expert panel and jump into the Q&A session. Weaving in questions from the audience. So audience members, please put your questions in the chat and we'll go through as many as possible. All right, let's get started. Please tell us a little who you are and a 1-minute introduction to your organization. Gosia, would you be willing to go first?
Of course. Good morning, everyone. I want to say good to see you, but I actually can't see you, but it's still good to have you here and good to be here with all of these great panelists. As a thunderstorm starts in Boston, for those of you, if you hear strange noises, that's what's happening. But anyway, my name is Gosia Tomaszewska. I'm the director of the Innovation Lab at Commonwealth. Commonwealth has been around for around 20 years, and it's a national nonprofit working on building security and opportunity for financially vulnerable people through innovation and partnerships, and with a real focus on systems change. The organization's overall focus is working with households living on low to moderate incomes, which, as we all know, disproportionately includes women, BIPOC folks, and immigrants. And the reason I'm here is that one of our key areas of focus is around tech for good, really thinking about how we can help build technology from the ground up in a way that's accessible to people living on low and moderate incomes. How can we get on the ground level working with fintechs and others to help these tools reflect the needs and wants of these groups, whether it's financial apps, AI, blockchain, sort of the list is long, but I'm excited to be here to talk about that and specifically about the inclusion for these folks.
Thank you, Gosia. Michael?
Sure. Hey there, everybody. Happy to be here as well. My name is Michael Rangel, founder CEO of Novo, where we've built a small business banking platform focused on very, very small businesses. The way we call it internally, or effectively mainstream American businesses spread across all 50 states. We've amassed a pretty wide portfolio now, north of 130,000 businesses, and we're servicing them with a checking account, which we believe is the foundation of the financial stack for all SMBs, with a debit card as an extension. So we're very much kind of reimagining the way that typical small business checking accounts have always kind of operated. And yeah, and that's me.
Thank you. Rob?
Yep, thank you. Rob Mannamkery. I am part of EY's financial services consulting practice. I am our ecosystem strategy lead, focused on customer growth and strategy across banking, both on the institutional retail side, as well as wealth management, working with many of the incumbent financial institutions as well as fintechs. Our main body of work has been focused a lot around primary research of consumers. So given what's happening with the pandemic, we wanted to get a better sense of how have consumers responded to the changing needs with their financial service institutions, as well as some of the new fintechs that they're working with. So a little bit about EY. We're a global professional services firm operating in over 150 countries in the areas of tax, audit, transactions, and consulting. Work with organizations of all shapes and sizes. So happy to be here today with my panelists.
Thank you, Rob. And Heather.
Good morning. My name is Heather Allen, and I'm representing Eastern Bank today. Eastern Bank is based out of Boston, Mass, and we have 110 locations, about 17 billion in assets, and we service markets from New Hampshire down to the tip of the Cape. We have a real strong focus on leading forward on social justice issues, obviously have a real interest in innovation with our second iteration of Eastern Labs, which we're in now. But from a business line perspective, really leaning in hard to business and commercial banking, and super proud of our 110 location branch network. but happy to be here today.
Thank you all for joining us. Excited to hear all your insights. So we'll jump into maybe the first question to kick it off. Over the past 18 months, financial services organizations had to digitize their processes in order to continue serving their customers during the pandemic. It feels like in many ways, the digitization that took 10 years or would have taken 10 years has been shrunk down to 18 months or even less than that. Can you share an overview of the journey financial institutions and especially your organizations have gone through in order to continue doing this? Maybe we'll start with Heather and Michael to give us some specific organization examples.
Sure. I mean, that certainly came to roost with us pretty quick. Like all of us, in the beginning of March last year, we were looking around saying, oh, this seems to be getting more serious. And specifically myself, who manages all of the contact center operations for Eastern, your environment is not made for a pandemic. So within 2 weeks, we were looking at each other saying, we have a completely on-prem solution and we've got to get out of here with the workforce that had primarily not worked from home. So we had luckily just signed with a cloud provider for contact center services and called them and said, how quickly can you get us out of this building? And we picked up the phone call, I think, on March 13th, and we had everyone deployed by April 7th. So we were one of the lucky ones to get out of there in about 3 weeks. But then, we had a different problem, right? Most of our branch franchise had to close and go to appointments only. And our contact center became one of the only places you could get real-time service, transactional service. So we were flooded pretty quickly, and things that we considered in pilot mode became pushed out pretty quickly. We had a chat presence that was really on our contact us page, but not forward. We had, new assets that we had launched about, queue callback, servicing our website. So we pushed everything forward incredibly quickly with little or no notice to the customers. But I got to tell you, they, whatever worry we had about doing this in pieces before went away because our clients jumped on it. Chat being one of them, we were just, everyone who was on hold, we were just on messaging on hold, begging them to try any other digital resource. Have you gone online? Have you tried our chat? And they went on chat, and even in the middle of that honest to God dumpster fire, chat had our highest NPS of any service we had at the bank. And that was in the middle of an incredibly difficult time. So not only did it launch, it was accepted better than most channels I have. So it's, it gets you to think, who's worried about digital adoption? Is it us or is it them, customers? But our customers, it really obviously pushed people towards self-service in a way that they weren't expecting, of all ages, right? And all acumen in terms of digital intelligence. But we have found it to be a position we don't want to walk away from. We want to stay in the mode we're in. We want to keep the pedal to the metal on this. But we did move forward in a way that was super fast without a lot of notice. And I can tell you that I'm the one-stop shop that you go to if you're upset before the president. And not one individual came to us during that whole time and said, I can't believe you're putting me off. I can't believe, the phones are less available. This truly was a digital adoption on our point, and we're excited to keep it rolling and not just, roll it back to legacy work. So we're excited to stay on this course.
What a rapid response to the circumstances. Thanks for sharing that with us, Heather. And Michael, I know Bank Novo has a strong digital presence even before the pandemic. Can you tell us about what the pandemic meant for your organization?
Yeah, totally. So obviously we have, let's say, different problems than Eastern Bank, which are very, very, very different for sure. But so that said, we were kind of like built in position in a way prior to the pandemic even hitting. We were just positioned in almost like the optimal way to ride that wave, right? And so, as you said, Abdul, it was almost like an acceleration of multiple years within like a few month time period where people were just kind of forced to think differently, right? During that period of time, it was very difficult for us because, just as the VC market was also kind of triaging their portfolios, us at Novo were like, oh my God, what's happening? What is happening with the world? The entire world is falling down. Somehow, right, we were convinced that small businesses would never exist anymore, right? They're like COVID is this crazy virus that will just kill everything all over the place. And so actually the opposite of that happened, right? Like last year, you can look at it, it's the most businesses created ever in history, more businesses, created every day than babies are born. And so there was kind of like this spurt in entrepreneurship. And so what then coincided with that was, as Heather was saying, kind of like this acceleration in digital adoption, right? You're spinning up all of these businesses, but guess what? These businesses weren't able to open accounts because they didn't want to go inside because they were scared about leaving their house. And so the way that I kind of articulate that to people is like, I had a story of an existing Novo customer who came to me within the last 6 months, and she said, "Hey, you guys saved my life last year." And I was like, well, I've gotten a lot of compliments, but that sounds pretty outrageous. And she said last year, in the height of the pandemic, she was pregnant and she wanted to open a business account. She was being required by a certain incumbent to literally leave her house and go into the branch. And that was the only way that she was going to open the account, right? And so like that just makes it super tangible, like the value, as Heather was saying, like this digital kind of transition is able to provide those people to a lot of people who may not have even known that they wanted that before, right? But then this whole kind of thing just accelerated. So, I mean, we just kind of leaned into that, right? We leaned into obviously digital onboarding. We ramped up our teams. We made sure that, the processing times, all of that stuff was kind of up to snuff. And that we were processing in a very timely manner because we started seeing all of our metrics off the charts. Coming through all sorts of affiliate channels, organic conversions, et cetera. So at that point, we kind of knew that we were seeing the early signs of something that I think is going to be a lasting change, right? And I don't believe that is going to kind of revert back to the mean. I think the mean has been very much readjusted.
Yeah, definitely agree with that. And Gosia, I know you spend a lot of time, thinking about how excluded communities are partake and get services in the financial sector. Can you tell us a little bit about how, organizations, especially financial institutions, have continued to serve these groups and what they've done over the last year, what you're seeing in the environment?
All right. So, our focus, as I said in the beginning, is really on the sort of segment of people who are living on low and moderate wages and their sort of access. So, and, as you were saying in the beginning, Abdul, this change was already happening, but this was just an avalanche. Thankfully for us, we actually did we do a lot of research and then implementation through our accelerator. But, luckily for us, we actually did a survey in late 2019 around the use of technology in the low and moderate income community. So then with COVID hit, we're like, okay, this is our opportunity to sort of do a survey now. So we did another one in early 2020 to sort of see what has changed during that time and really look at the needs and wants of financially vulnerable people. And the results were quite compelling. Although before I go into them, we surveyed almost 1,300 people, and we, sort of oversampled for women and Black folks and Latinx folks, and everybody that we surveyed was making under 60K. Again, that's our focus that we're doing. So yeah, some of the findings are that, and again, this will not be surprising anything to anyone here. 30% of respondents reported that they changed how they bank in response to the pandemic. And what's more interesting is that individuals who experienced a financial hardship during the pandemic were actually 4.5 times more likely to have changed how they bank, which is amazing. But people, I think, looking for places to try to resolve their issues, like the story that Michael was just saying, how do we get done what we need to get done, especially as we're experiencing financial challenges. Another, the change in the use of conversational AI, which was sort of our focus, so chatbots and virtual assistants, was especially drastic. I think, as Heather was pointing to that from her experience as well. Our research has shown that as well, that it has become one of the primary ways that people interact with their banking systems now. And we also found that people surveyed during COVID were over 2 times more likely to have interacted with the chatbot than participants prior to the pandemic. So think about that. That's a sort of huge change. But not only that, but trust in chatbots increased from 29% of respondents likely to use a chatbot pre-pandemic to 45 during the pandemic. So also quite a big change. One interesting tidbit there is that there were differences in trust by demographics, with Black respondents actually reporting the highest level of trust. Happy to share the report. There's a lot more data and sort of rich information there. In addition to this survey, we did also some follow-up interviews. We do a lot of sort of consumer research one-on-one. And actually, the majority of people we interviewed said that they would continue their banking practices they adopted during the pandemic, post-pandemic, right? So it's not just a temporary change; it's a change that's going to continue. So I don't know. It really feels like we're at a transition point because of the sort of new and transformative nature of these new technologies. But we're here to say, let's make sure that this expansion, of use and is really an opportunity to create tools with women, immigrants, and BIPOC folks in mind. And not only will this make these technologies more inclusive, but it's also a way to tap into an untapped consumer segment for fintechs and financial institutions. So it's also sort of a business opportunity for businesses out there. But yeah, just here to ring the bell on always thinking of these folks and making sure that we're understanding what they need and then applying it as this change is happening.
No, definitely that makes sense. And Gosia, you shared the report with me. I really found it fascinating. Maybe you can share it with the group as well, so that individuals can go and read the report on their time. And finally, Rob, I know you get to see the finance sector as a whole. What are you seeing in terms of digitization and what's happened over the last 18 months?
Yeah, Abdul, it's really interesting. So if I were to look at the conversations we were having with our clients, let's say, 18 to 20 months ago, it was very much around digital incrementalism, right? So how can I improve a certain process by applying digital properties to it? How can I improve my mobile experience, my digital channel experience? What we've seen, though, over the past 18 months has truly been incredible, right? As everyone here can attest to. Most of the incumbents now, a lot of them have actually moved their core banking platforms over to cloud native solutions. They've made so much investment over digital out of a necessity over the past 18 months. The conversations we're having now are much more about how can we identify new opportunities, new business models to really transform our business, right? How do we reevaluate our metrics to take a look at these different innovation areas and to actually start to generate revenue off of them? So embedded finance and open banking, as I mentioned, we did a consumer survey. 63% of the consumers are interested in open banking and embedded finance solutions, which is massive, right? So there's a huge opportunity there for the incumbent financial institutions to really leverage that. I would say that, to Gosia's point, the cost of to serve these customers now has also been reduced, right, because of this transformation. So now a lot of our clients are asking us about these micro segments that they can work with to be more financially inclusive, to apply alternative data models and algorithms to identify these consumers and essentially provide a new service to them that were primarily left out of the banking ecosystem. So it's incredible to see the transition we've made over the past, year and a half or so, and how institutions are actually taking this to heart. The other piece I just want to quickly bring up is the whole FinTech partnership. So a lot of the incumbents were somewhat reticent 2 years ago to do these partnerships. They didn't realize how could a successful partnership actually work. I think now we're seeing a lot more of these innovative functions playing to that, right? They've now started to look at partnerships a whole lot more, leverage those technologies. Also, from an infrastructure perspective, they're able to now integrate them much easier than they were, let's say, 2 years ago. So we're getting a lot more questions on how to identify fintechs, how we work with fintechs, how we partner with them. So it's been really interesting, to say the least, over the past year and a half or so.
No, that's wonderful. Thank you. And then, as an investor, I'm really fascinated by the rapid growth of digital first and digital only financial institutions across the globe. So some of the most valuable fintech startups include, neobanks like Chime here in the US, Revolut in the UK, Nubank in Brazil. When you think about what's going on, what are some of the key factors that are enabling these institutions to effectively build trust in a digital world? And are there any key learnings established financial institutions can take from their success? Maybe Gosia, we can start with you again.
Sure, happy to start. So again, as we discussed, there's no question, I think, that the shift to online usage of financial institutions has been sort of unprecedented. And as I said, it's not just sort of for those on higher incomes. Same is true for people living on low and moderate incomes. And, yes, trust has increased, especially in conversational AI during the pandemic. But, as I mentioned before, we also talked to consumers, right, in interviews. And we found that, even though trust has increased, we found that generally financially vulnerable people are still concerned about things like security or being misunderstood by the chatbot and sort of being uncertain whether their needs will be met by a chatbot. And I think additionally, there's not that much research available on how these technologies can meet the needs of people living on low and moderate incomes and address their specific concerns, because they're different than concerns of sort of other demographics. And, without this kind of research, I think it would be hard for innovators to design solutions that reflect the needs and aspirations of the people, who, I would argue, need some of these services most than others. And so I think from our end, as a sort of nonprofit that does a lot of research and works with, partners, whether it's fintechs or sort of larger established institutions to sort of continue to do research. We're actually about to start a field test with Boost AI and the Michigan State University Federal Credit Union. It's a mouthful, but they're a wonderful partner to dig deeper and understand these concerns out and how to address them. The test will look at trust and comfort and engagement and financial well-being. Some of the questions that we'll be asking are around chatbots, like, what if a chatbot proactively reaches out to users who have experienced financial hardship? Does that build trust with conversational AI? What kind of messaging sort of engender trust and engagement from people? So I think there's still a lot of questions, and we're looking at them. And through this field test and potentially others, we're hoping to create guidelines and a toolkit for folks who are designing and developing and implementing these tools that will make them more easily accessible by those that are generally not thought of when these tools are developed. So I think, again, I think more research, more understanding on design, specifically for low and moderate income folks, I think is something that still needs work, and would love to hear from others who are working in that space.
That's very insightful. Thank you, Gosia. And Rob, I know you have some insights on this as well,
yeah.
And Michael as well. Maybe Rob, you can go first in terms of what you're seeing that some of the incumbents and some of the insights incumbents can take from what these digital first neobanks are doing.
Yeah, absolutely, Abdul. Happy to do that. So going back to the research, we looked at over 5,000 U.S. consumers across all age ranges and affluency levels following the U.S. Census. And I will tell you a stat that really stands out for me. 31% of all respondents selected a FinTech as their PFR, primary financial relationship. When we had done this survey 2 years ago, only 6% selected a FinTech as their PFR. What that tells us is really two things. One is that the definition of trust is evolving. Number two is FinTechs and the incumbent financial institutions sort of look at the trust vectors somewhat differently, but I think they're going to begin aligning soon. So in other words, those that selected an incumbent financial institution as their primary financial services relationship, it was really about having control over that data, right? So the resiliency, soundness, security aspects of data, they're safeguarding their information. And that was the number one beacon, so to speak, of indication of fostering trust. With the FinTechs, it was more about understanding their needs, personalization, what products and services are relevant to them, how FinTechs that speak to them, right, at a sort of more functional and ethical level, right? And so what's fascinating to me is that FinTechs provide a huge value-added service in this whole rebuilding and redefinition of trust. And I think financial institutions are taking notice of that, right? And so this is now an opportunity, I think, for there to be an alignment there, because there's clearly components that FinTechs are very strong in. There are components that institutional the incumbents are very strong in. And so now we're seeing big lessons learned off of Chime and Nubank, the features and services that they provide that are unique to the specific segments they're going after, right? Including, some of the underbanked. And then the financial services institutions who are now have that infrastructure to protect that information. So there's definitely an opportunity for congruency there going forward.
Yeah, and it's incredible to see also the layering of financial products. Like, when you see Chime or Nubank working with an insurance firm, to embed InsurTech solutions, to offer more services to their customers. It seems like there's been a lot of that happening in the industry as well as the last 18 months.
Moneyline is another great example that now are taking insurance and and banking together in this ecosystem, right? So there's a lot out there for sure.
Exactly. And Michael, what are you seeing on your end, especially on the business B2B side?
Yeah, before I get into the B2B side, I want to just comment on what you guys are just talking about. We're very much close with the team over at Chime. We're definitely in their shadow. We consider them our big brother, if you will, because the gentleman who led our seed round also led Chime Series A. So, and there are a lot of similarities with the way that we've built the business. And a lot of kind of tangential learnings we've taken away. I think what you're really seeing at the industry level, right, is this almost like this paradigm shift, right, which Rob spoke very well to, right? You have these new challengers that are coming to the table saying, how do I build the best products for X, whatever X segment is, right? Whether it be the underbanked, whether it be immigrants, whatever it may be. Like, let me just focus on building the best product for X. And then once I build that core product, then I'm going to layer on different things, right? That gets to the concept of the layer cake, right? The first layer being the foundation, then you layer on different value-added products and services to increase that value. And I think that's what you're seeing with Chime and some of these other leaders that you see around the globe. And I think that is just fundamentally a very different way to think about it, right? Traditionally, banking tools have always been, hey, here's a circular peg, right? AKA the bank. Hey, here's this square block, right? You figure it out, right? And in a lot of cases, they might not work. So it forces, whether it's the individual retail consumer or the SMB or whatever profile it might be, to go figure it out, whether that be with subsequent other tools around the kind of periphery of banking in order to make their financial operations work for them. What you're seeing now at challengers are focused on how do we make this product work for these consumers in a more efficient way, right? And make sure that we're kind of getting away from the typical stigma of how the product has, been traditionally. For us at Novo, the way that we've been doing it is we're just offering a heightened level of customizability to the SMB, so the small business checking account, right? So the average small business has to go to 7 different online portals, right? Average small business in the US goes to 7 different online portals to then piece back their financial picture. That's a lot of work for anybody, even someone with a degree in finance or accounting. That's a lot to stomach, especially if you are the only person at the company. And so you can imagine that that's one of the leading catalysts to the leading reason for business failure, which is poor cash management, right? A lot of stuff falls through the cracks, right? You can't account for everything. You're hoping, that QuickBooks is going to potentially help you, right? But that's always done in arrears, so it's not really a way to think about building a business looking forward. And so what we're doing at Novo is kind of starting to streamline the data, right? Across all those 7 different online portals, how do we have those 7 different online portals communicate to the bank, right? How do we have those 7 different online portals visible to the business owner in one portal, right? So we start kind of centralizing. It's like a central command center for these businesses, so they don't have to go to these seven different online outlets to then figure it all out themselves, right? It's more so, hey, we're going to do this for you, right? And then see if that helps. And we've gotten incredible feedback. A lot of our customers have actually said, wow, we didn't even know a bank could do this, right? So it's really kind of interesting sentiment that we're getting from the market, because we're starting to bring all of those things together where we believe it should be.
No, that makes a lot of sense. And, there's definitely a lot of interesting opportunities where, to help with tax credits, tax filings for SMBs, just to make their lives a lot easier. So excited to see how Bank Novo approaches that in the coming years. Maybe as a follow-up to that, Michael, what I was curious, what are some emerging technologies? We've heard about AI powered chatbots. Are there other emerging technologies that your organization is using to build trust?
Yeah, listen, I mean, that's a loaded question. The way that we think about it is we're trying to rebuild what I said earlier, the foundation of the financial stack for SMBs. That's where we believe is the root problem to a lot of the complexities in building a business kind of lies within the checking account, literally itself, because that's what provides the foundation to everything else, right? Credit cards, loans, et cetera, et cetera, et cetera. So we're really focused, like laser focused on building that first before kind of unveiling buzzword bingo to the entire world. So like we're very focused on creating that value. When it comes to some of these other leading technologies, like we haven't really implemented a lot of that stuff, right? We want to limit the variables as much as possible in order to offer that service before kind of sprinkling in some of those things, right? Controlling the narrative, if you will.
Makes sense. And so let's continue on. In the digital world, there are many concerns around fraud, which inhibit trust building. How are financial institutions prioritizing investments to build their digital presence while navigating the evolving trust dynamics with current and prospective consumers? Heather, any thoughts on this?
Yeah, I mean, this is obviously, from our perspective, always been a top issue for us, fraud, particularly in digital and contact center, being pen tested constantly, phishing. So, we were a super early adopter of biometric technology with Nuance. Back in 2014, we signed with them, launched it in 2015. Back then, like Touch ID was the most biometric experience customers knew about, but our ID practices were so horrific, not having a lot of shared secrets and not wallet questions. How we identified our customers was one of the biggest customer complaints that we had. So we're like, you can only go up from here. So we spoke about the different ways we could do it. We met with Nuance. We were like, okay, we did natural language, which is, this is not matching WAV files. These are 200 properties of your voice, from intonation to how quickly, and we launched it. And we, again, our customers, we're over 200-year-old bank. Our customers trusted us. We just started answering the phone one day and said, hey, we know you hate the way we ID you. We have this new biometric thing. Are you in? This is how it works. And they're like, yeah, this is horrible. I'm in. So, I mean, I think when you bring digital value and they trust you, it's got to solve for something. It can't be too, too niche-y. I mean, we literally were solving problems with this. We're still using it today. But the landscape is even so much worse today, since the more serious breaches at the credit bureaus years ago, that we are now also using biometrics to look for particular voices on the perimeter. So we now ID voices that are known to be fraudsters, and we're not even letting them in anymore to just stop the bleeding at the top of the house. And it's constant, but we love the solution. And for us, it's something that not only was, we were the first to do it in the Americas, with Nuance. So we really didn't have anybody to talk to see how this would go. But we've never looked back, and it's been a huge ad for us in fighting fraud.
Yeah, and in many ways, fighting fraud is not a single institution activity. Rob, I know you have some insights around how organizations are collaborating to fight fraud and how, especially financial institutions, are working together. Can you tell us what's been happening over the last 18 months in this space?
Yeah, so it's really interesting because typically the incumbents usually have had guarded walls on these things, right? Now we're seeing much more of a cooperative between these different institutions. They're sharing information, sharing best practices. They're monitoring cyber situations as they occur in different regions, sharing it with their fellow regions. So it's become much more collectively cooperative, which is great. And so, they understand that this is extremely important and that this is only going to become even more important as we move forward and things become more and more digital. And as these business models change and now they integrate with different solutions, the whole general broad network and ecosystem is extremely incredible and also more vulnerable at that point, right? So they're all about sharing information, best practices, working together. So that was something that wasn't very common a few years back. So we're seeing more of that happen, which is great.
Oh, definitely, it's very needed. And how does that contribute to kind of an erosion of trust that you mentioned in your report?
Yeah, so the whole concept of erosion of trust are, from our perspective, if obviously there's a cyber attack, there's no doubt there's a challenge there. But the erosion of trust also stems from how you engage with your financial institution. So in other words, if we take a look at push the cyber piece of it aside, but more of that personalization piece, if my financial institution is sending me marketing mail, right, for a credit card that I already have with them, to me that's an aspect of erosion of trust, right? Because I've come to expect certain components from my financial institution, that they know me, that they understand me, they understand my financial situation, that every single interaction I have with them should be a buildup of trust. And so the financial services world has sort of this expectation from a consumer mindset that they need to actually build trust. And through things like cyber initiatives, through things like personalization, all of it starts to come together, right? So consumers expect their information safeguarded, but they're also happy to share information so long as they realize why that information is being shared and for what purposes, and is it going to benefit them. That's ultimately the entire concept of the new trust equation that we're seeing as part of this research.
Very insightful. Michael, Gosia, any additional comments on this? All right. So there are many B2B solutions that are helping businesses validate customers and do activities like carrying out AML and KYC compliance. In what ways are prospective consumers building trust with organizations they're engaging with for the first time, especially when this is happening completely digitally? There's no physical branch that they're going to, so they're not always as sure who is the counterparty that they're interacting with. Michael, what are your thoughts?
Yes, I mean, this kind of loosely ties back to what I just shared, right, on some of the challengers and what they're getting right, and their focus on the customer. Right, so especially when you're in a digital world, I think what you're going to see over the next few years is brand is actually going to continue to become exponentially more important over time, especially like bank brand, right? I believe that there's going to be this sense of like a financial stack for people, whether individuals or SMBs, that people are going to be incredibly, hopefully proud of, right? Like, hey, I use X, just as in a lot of people who have iPhones, right? Like, hey, I'm all Apple, right? I have an iPhone, I have a Mac, I have so on and so forth, right? I'm in that ecosystem. I think you're going to see the importance of brand in banking, right, become almost as important as like the type of car you drive. Because a lot of these people, especially some of our customers that we engage with, right, like we've spent a bunch of time there. Like, why did you come? How did you hear about us, right? Like, who did you hear about us from? What were kind of those triggers? And a lot of this is kind of this intangible sense of alignment, right? Like people feel that they're kind of like joining this community of like minds, that they are joining this community of people who are all using a product that is built for them, right, with their needs in mind, as opposed to that square peg in the circular hole metaphor that I gave before, right? That is very dehumanizing, right? Like, why would you want to sign up for something like that when you're just a number on a spreadsheet somewhere? And so I think that kind of like shift is exactly what we're seeing. And like a lot of people, the first stop people are going to is online, right? Like the leading place where small businesses go to find out answers to any financial questions that they might have is, guess where? Google, right? And so whatever pops up in Google is almost like this source of truth, this trusted advisor of, these affiliate platforms, right? The kind of like publications out there are going to give them that insight, as opposed to what was, in the last century, for instance, of going into the actual bank branch, right? Like that is kind of like this different shift in what I believe is going on. So I think that brand piece is key there.
Yeah. And that's a really great point, Michael. And I'm sure many entrepreneurs in the audience are wondering this. Initially, when you're bringing your product to market, how do you build that initial trust? Is it based on the credibility that the founders bring to the table? Is it by working with a small set of customers initially and building trust within them and them being their advocates? What are I guess ways that entrepreneurs can build that initial trust for their startups?
Totally, and amazing question, Abdul. There are a few ways. One, I think, is from Paul Graham, right, when he, from his famous essay a few years back, Do Things That Don't Scale, and you kind of tapped into it already, right? Like, you need to be attached at the hip with your customers, with your early adopters. What do you like? What don't you like, right? What can we improve? What do we just get rid of? And you need to spend as much time with them as possible. It's something that I reinforce every day at Novo is like, anything we garner from customers, from the mouths of customers, whether that be a good review or a bad review, whether that be a good comment on social media or a bad comment on social media, that is gold, right? And what we do and how we leverage that data and that information, that customer sentiment, is how we shape our product. Very much the way that we are now and the way that we were years ago when we only had a few customers on the platform, right? But it's like, when you're just starting out, you obviously have a small focus group, whether it be friends, whether it be people in the industry. You just need to be sopping up as much of that feedback as possible. And then hopefully those people start becoming like your own ambassadors, right? Who start talking about you, who start talking about your product. This product is so much better than X, right? And then that'll lead you down different rabbit holes as well. But that would be the main thing that I would recommend to early stage founders, is just have a very, very, very special appreciation for your customers, for your early customers, and value that feedback.
Yeah, I think I would say Michael, that's great. I mean, I think that's what we do at Commonwealth, is really like focus on the customer. And I think that's always a good approach. And I think what you were saying earlier in terms of really building a product that, is not putting a square in a circle hole, or however you say that, is really important, I think. And building something that has like, when you're focused sort of on customers that are sort of the most disadvantaged, and like build something that's really sort of accessible to them. I think that by that you're also making it accessible to many others, and sort of building that, and then building on that and adding to sort of more listening to your customers and adding more of what they need. Whether it's a small business customer or a sort of individual. I mean, and as we know, as small businesses often, especially a micro businesses, less than 5 people, really count on their own credit score and their own sort of individual things to get that business started. So yeah, I think that's I would agree that that's really important in terms of and building trust from early on, and making it accessible from early on.
That's very helpful. And we can't talk about trust without bringing up blockchain. How do you think blockchain technology will impact how we continue to build trust digitally, especially for financial institutions? Gosia, Michael, Rob, any thoughts on that?
I'm happy to take a first shot at that. So I'm sanguine about blockchain. I absolutely think it's a interesting technology, and I think there's a lot more that we can do with it. I think for the end consumer on building trust, it's the application of blockchain that's going to be critical there, right? So if they can actually translate that to, I get my money faster, I'm able to do payments faster, I'm able to move money into my savings jar, in a more efficient way. I think those are the benefits that if we can apply blockchain to, that will value to the consumer. So there's definitely opportunities there. There's obviously opportunities from a bank perspective, financial institution perspective, on cost savings, right? If they get it right and it works, and continue to invest in it. Now, if we're going to then equate blockchain to crypto, that becomes much more of a philosophical discussion. And obviously, I'm sure all of us on this panel have our own thoughts about that. But there is and we tested this out as part of our research, there are a certain set of consumers that really value the opportunities behind crypto, right? And sort of what they see is sort of a different sort of take on financial services. So how financial institutions weave that in, how fintechs play a role. I think there's a lot that can happen there, and we've just only, I think, began to scratch the surface on that one.
Yeah, man, I totally agree with Rob once again. Oh.
No, go ahead, please.
I was just going to say, I totally agree with Rob once again. Rob, I feel like this is definitely a trend between you and I. But I totally agree with him. I think that this is an area that, a lot of people potentially gravitate to. It's definitely a, fancy buzzword of sorts, and the theoretical value of blockchain is incredible. Like, in a perfect world, right, it could solve so much theoretically. But guess what? What are we all doing this for at the end of the day anyways, is the end customer. If the end customer doesn't necessarily care about whatever technology it is that is powering whatever product, right? Like, I think that in and of itself almost discounts it. Yes, there are a lot of values for it and of the value that it could create. But that being said, right, this gets back to what I was saying before about that focus on UX. Right, guess what? If me adopting blockchain now versus me adopting my current technology stack, and for the end customer, it's going to be the same-ish, experience. The adoption of blockchain for me and building that out is going to be an incredibly heavy lift, right? So if I'm not making the customer's life exponentially happier, why would I necessarily do it, right? Like that doesn't make a lot of sense. I'd rather invest those resources in actually creating tangible value for the end customer. So that being said, I think kind of that aside, blockchain is a really interesting concept, right? And super thought-provoking. That said, I think there's so much, like there's such a high sense of technical debt in banking, right? Like we're still operating on servers from decades ago, right? Like I just saw it, I think this week, I think JP Morgan just signed some sort of arrangement with, I think it was Thought Machine. Right, like moving there you go. And so like, that's cool, right? Like we're gonna need to see way more of that inflection point prior to kind of the introduction of blockchain in this equation, in my mind.
Yeah, interestingly, when I was trying to get in after Rob, I was going to say, oh my God, Rob just said mostly what I was going to say. So I think we're all, at this, on the same page in terms of that there's definitely potential in blockchain, given its sort of decentralized nature. And, whether it's increasing speed and reducing fees for digital payments, maybe even a potential alternative credit sort of system, or, providing quicker and easier access to micro business loans. There are like, all kinds of different potential. I mean, I think what I would add to the conversation is that, whatever tools are created and, and it's sort of maybe might be lower barriers for entry because it's on blockchain, but still we need to continue thinking about how to design them on blockchain to be inclusive, right? Like blockchain itself is not going to be like magic bullet, like, oh, it's on blockchain, so it's going to include everyone, right? Like, how do we actually, it's within a system that's already unequal, right? In the last decade, we thought AI algorithms were, that were built sort of in the last decade, that we'd get rid of bias, right? But as we know, that was not the case. In fact, very much the opposite. So yeah, I think it does have potential. I think it's our role as an ecosystem to make sure that, that it's just developed in a way that's, that's equitable and is not replicating the inequities that already are baked into our sort of overall financial system.
Very much agree. And one thing that I think we haven't had an opportunity to chat about is around that's very much tried to trust is, does the organization have your best intentions in mind? And one of the things that we haven't talked about is around financial health. Over the last year, obviously with, government stimulus checks and, other measures to help, people navigate the pandemic, we've seen financial health improve. But as, interest rates rise, and some of these government benefits come to an end, how do you think that's going to impact individuals' financial health and like the trust that they have in the financial institutions that they closely work with? Gosia, Rob, or Heather, any of you?
Yeah, I mean, even through the pandemic, right? Even with the best data that you have, you think you have a pretty good handle, just not your own data, but marketplace data of what's going on and what's happening. And then something like the pandemic happens, and people call you, and then part of the issue with how busy it was is people were just planting themselves down and telling you what's going on with them and how this is going to affect them. And even a customer you were relatively familiar with was in a much more perilous financial position than you even knew, because they were just keeping it together, right? Just at the most tight level, they were keeping it together. And you're sitting here, and this is just call after call after call. And it just makes you look at things. You knew there was struggle out there in the world. You're not ignorant to it, but the level of how much people's finances are just worrisome to them, and then for this to happen, or even people calling us, it's not affecting me now, but what if it does? I think even when we would deploy assets that would be like, hey, check out your financial health, it was not always picked up and run with by a customer. So I even think the appetite and how much this scared people, even people we would not consider financially unstable, I think it scared a lot of people and just sparked a lot of interest in getting it together, not wanting to feel like that again, and maybe not in the segments that you would think. For myself, it was really eye-opening. We were looking at each other like, these people need help. This is at a much grander scale than we had thought. So for us, I think we're always looking for that next best thing in that area. But I think for all of us, we had to really scramble to really lean in on advice and what that best advice is, be it digital advice or in person. We certainly felt it.
I think to Heather's point, financial health is obviously of top of mind for most individuals. So just a quick stat I want to share. So when we looked at mass market, around 19% of consumers said that they were in a better financial situation post-COVID than they were before, right? 34% said they were actually worse off. So it's really interesting to see, how that shift has been happening there. The ones that actually reported that they were in a better financial situation, it had to do because they actually sought out value propositions from fintechs and incumbents that offered financial health services, right? So here's how much money you can save. And it wasn't necessarily, an advisor. It was through digital means, right? Through chatbots and other services that they provided. So really interested to see how those types of services can actually be a big game changer for financial institutions.
Makes a lot of sense. Thank you both, Heather and Rob. One question that I wanted to bring up that came from the audience is, and Heather, you touched on this with regards to data, is how critical is good quality usable data? And how do you ensure that the data is actually trustable and actionable?
Well, I mean, in terms of, I think I think for us, it drives us, but it doesn't define everything. You have to take it, that's, I also manage the survey the survey area of our bank, customer intelligence, and, we've all done it. We've asked customers the same things in different ways and gotten 2 different surveys, and we're like, how do you really feel? So even with the best intelligence, I think, we're moving towards things like when we do work to improve our UIs and things like that, is just use live user groups, talk to people, call them, because what we're getting back sometimes wasn't really skewing with a launched experience, right? What we were seeing. So I think for us, although it's a digital experience, we're getting a bit more boost to the ground, getting some real-time feedback rather than data being the end-all be-all of kind of how we're driving success.
And I know we're almost out of time. There's a few key things to wrap up as we get maybe potentially one more question from the audience. What are some final thoughts we can leave the audience with in regards to trust building, and just any thoughts on how financial institutions will continue to build trust over the next few years?
Happy to start. That's what I do in all of our Zoom meetings. There's silence, and I come in even if I don't have anything smart to say sometimes. But hopefully this time I actually have some interesting thoughts. I mean, I would say it was great to have this conversation, especially with these panelists, because I really do think we're sort of in this like unprecedented moment both because of the, increased use by customers, that was sort of like forced in many ways by COVID. But, particularly, also LMI folks who are using it a lot more and, we're not using it as much before. And within that, people of color and just being on this panel and, talking to other partners, there's really high interest of openness from the fintech sector, whether it's like Michael talking about really focusing on building a product that's accessible to everyone and that's, understanding the needs of the consumers, or Heather, who comes from a sort of more established institution, really trying to listen to the consumers and asking yourself, as Heather, as you were saying, right, like who's really scared of the, of the digital transformation? Is it the consumer? Is it the, not disregarding that, of course, there's a whole segment of people that we didn't talk about today that, don't have access to internet, don't have access to digital devices. Although, again, I think we know that the low and moderate income community, if they have access, it's through a phone. So I think all of these services many times are relevant. But yeah, it does seem like a moment where we can all come together and figure out a way to make it accessible, to make it equitable, and to really sort of work together as an ecosystem to build trust in a way that actually engenders trust, not just like figure out a few cosmetic changes and be like, yeah, trust us, we're great, but really making people feel like they're getting what they want, they're getting the security that they want, they're getting the personalization that they want to be able to operate in this new sort of digital world.
Yeah, just to add on that, I mean, kind of going back to my earlier point about what does an early stage startup founder kind of do when thinking through brand. I just think, building trust is directly correlated to listening, right? Just listening to whoever, whether that's your spouse, whether that's your friends, whether it's your family, whether it's your customers, like that is how you build trust, right? So for financial institutions, it's more like listen to your customers, right? Like where are your customers kind of asking for improvements? Where are your customers asking for products? And like, usually, if you hear the same response enough, it should probably be evidence enough to, invest in that area.
Yeah, I mean, for us in the financial service, it's certainly, I would have had a different answer maybe 2 years ago, but now, we do need to double down on advice, get our employees like more tools to help with that advice, right? Because some of your employees need the same advice, right? We all do sometimes. So, I mean, how do we invite the conversation, I think, is some of it, because sometimes there is a little unnecessary shame around it. And we do, especially at Eastern Bank, where we're embedded in communities that need a diverse type of help, right? So, I mean, I think for us, we're just looking for ways to kind of double down on how to bring that advice, be it digitally or otherwise, to bear in a way that maybe we were doing or not doing before as much.
Yeah, and I completely agree with everything that everyone said here. Understanding what the consumer is looking for, staying close to them, really rethinking your products and services, built around the utility of what the customer is trying to do is extremely important. It's not a sort of linear process either. It needs to be constantly done, continuously done. It has to become part of the organization, embedded within the organization, all extremely critical points. So couldn't agree more with what everyone said.
Thank you. You will all have the opportunity to continue engaging with our XR panel at other sessions during Boston FinTech Week. Thank you for joining this session, Heather, Michael, Gosia, and Rob. We know you have busy work and life schedules. Thank you for taking the time to share your insights with us today and for being part of the Boston FinTech Week. You've given us a lot to think about. Thank you, everyone.
Thanks so much.
Thank you. Take care. Bye-bye.